Okay, everybody, and thanks for joining us here on the Morning Edge. Apologize for the delay. We had some live trade issues. I was able to log in, but it just wouldn't engage. I mean, I pushed the start button, but it just kept saying waiting, waiting, waiting. So it looks like we're all in good now. So let me go and move this. It'll be just a moment. Okay, we've seen a pretty good bounce back from yesterday's, lows. Not only in the cable to a certain extent, also the euro. We talked about gold going down to 1307 yesterday as the first stop. It looks like we made it all the way down to 1308, and we're currently at 1311 and change. Like I said, I thought most of this was overdone on the downside, and that I came in a little bit too early to try and pick up the S&Ps, but I kept saying, it's a UK problem, it's not a US problem. So don't get over wrapped up, but don't, looking to buy assets until we get well into the cash equity open. And we saw that pretty much materialize, although they kept the indices under pressure all day long. But today we are getting that turnaround Tuesday with the euro rallying. We actually ran out of gas in the euro right at the 38%. We backed down from that. Gold, as I mentioned yesterday, we brought up the gold miners and the junior gold miners, and we're making a point that you've seen that divergence, that things couldn't have looked any worse when we were on the air yesterday, yet gold not only could not make new highs, it couldn't even and could not even challenge the most recent highs. It couldn't even challenge the most recent resistance, much less the recent highs or even make new highs. And that's come to fruition, in the sense that from where we were talking about, I think we lost like, $20 or something like that. So you had a chance to make yourself some good money, or if nothing else, at least save yourself some money. As I mentioned before, those that were interested in wanting to buy gold, my point was, don't buy it right now. Wait for it to get towards 1307, and potentially it could go as low as 1289, but the first area would be 1307, and we got to 1308, and right now we're at 1311 and change. Been a lot of news. We've seen, a situation like this, there's so much news hitting that, and obviously the UK got taken down by S&P, their credit rating, and there's just news all over the place. It's hard to even keep up with the news. You're just basically assuming where markets are as far as levels and how far overdone do you think they can go, and what do you think the actual overall outlook is for a market. Perfect example is, like I said, the S&Ps, where we've rallied, not a whole lot, I mean a huge amount, but certainly have come off of those lows, and we saw even the crude oil, which was being bludgeoned yesterday, we've rallied $2 off of those lows. So it's actually almost right at $2, almost right at $2 off of the lows. We've run into a little bit of trouble up in here. Not much, we're just positive, but we're actually at the 38% in the crude oil. As mentioned about the gold, and we'll look at some of the other FX pairs and any other markets, but obviously in this kind of environment, it's shoot first, ask questions later. That's why you had to go and be prepared for that kind of action. And then you have to, as I said before, when you're going to come into areas either to buy or sell, you have to really make the most of the area you come in, try and get confluence, because the markets are going to push further than what you expect, and you can find yourself in a hole real fast, get stopped out, and then ultimately still get proven right, only to see your money go bye-bye. I mean, a perfect example is, although that's my fault, I stepped in which is probably kind of crazy at the time, but I stepped in and, reiterate that again as an example. I stepped in and sold gold short at 13, was it 29 or 28, I can't remember. I added at 13.38, and then I added again at 13.49. Now, if you look at it now, it's like, man, that was a fantastic trade. Well, it wasn't a fantastic trade when it was up my rear end pretty good at 13.62, and I was ready to puke out at about 13.67, 13.68, and I was down a nice chunk of change. So now, Sam's asking what are my charts. The way I always do things, we go over some news and then I go into the charts. That's how we do it, and I'm not deviating too much from that. We did get a little bit of a late start this morning because of, with the Wise Trade, not Wise Trade, but GoToWebinar. I clicked on the start button, it started, but then it just wouldn't, everything went, but then it just kept saying, gonna start, and it did engage. But we'll get into the charts. The way we usually do it on the European crossover, we go over any news. Like I said, there's so much news, it's probably too much to go over. We go over any economic reports that are due out for the day, and then we move into the charts. I'm covering for Blake, so we're going to be here for 2 hours, and I only take one break during that time, and I take that around the top of the hour. So we've got a ton of time to go over, the different news that's coming across the wires. We can go and take a look at what reports are coming out today. We do have GDP, final GDP. A lot of these numbers, they're not even going to move the market because like I said, there's so much going on. They'll move it a little bit, but not with any real result, especially with the final GDP for Q1. That's going to have no bearing whatsoever. As we come into 9 a.m. Eastern, we have the Case-Shiller home prices. That'll probably, give a little bit of a confidence, provided they go and hold up well. We also have consumer confidence at 10 a.m. Eastern. Once again, a lot of people are going to look at this, and the Reuters poll is for an up move from 92.60 to 93.30. Obviously, it's not going to go on and encompass what happened with the actual Brexit vote, so it's not going to have that. People are going to look at it and quickly devalue it, when it comes out, no matter if it comes out even better than 93.30, they'll quickly discount it. Say, no, it doesn't mean anything. Wait till we get the next one. And we also have the Richmond Fed, which will be at 10 a.m. Eastern, and Dallas Fed Services. Yesterday we had Dallas Fed Manufacturing. And then at the close of today, after the close, we'll have API stocks. Remember I think also we got yesterday, I think there was Genscape was showing that there was going to be a draw. So initially, Crew was trying to hang on, but of course, like I said, it fell apart. Well, the Spruce fell apart too. So also, we see here that the sterling came back from its lows. Obviously, like I said, generally what we usually do is we'll cover some news here in the European crossover, but things are moving so fast, and news once it hits the wires within an hour or so, it's like yesterday's news. It doesn't even matter. People aren't even paying that much attention to it. So we see here that the euro pound, we were talking about that 84.16 yesterday. We sold off from that area, so this has done really well. We were talking about that. I don't even cover the euro pound, but we can, that turned out really well on the analysis that we were doing on that. Let's get back here to the news. As I said, we're going to move into the charts, but the thing is you have to have a very broad perspective when you're trading these kind of markets. There were people that were looking for, 2040, 2020, whatever. I mean, not 24, I mean 1940. And I said, you have to realize you have to step back, way back away, and then say, wait a minute, this is a UK problem. It's not a US problem. We're at 4.9% unemployment. We're really overdone. Knowing, though, that coming into a Monday, they were going to thrash them. As I said, I stepped in a little bit early on the S&Ps. Actually, I was up, and then I ended up hanging on. I should have hung on, and then we quickly went lower, and then they had a precedent for all it's worth, and we've come back from those levels. We're seeing crude run out of gas a little bit here at the 38%. I shared that chart with some people 47.63 is at 38% of the most recent range of 45.82 to 50.54, and that's right where we ran out of gas. It was 47.63. I think the market topped out at what, 47.70, and we're pulling back. Not a whole lot, but I'm saying is we pulled back. We did get a buy in the crude oil late yesterday on Monday, and basically you have to go with that momentum. We're going to move into the charts now. As you can see here on the euro, I'm just going to move in real quickly on this 38%. You can see here where we ran out of gas. Right there, right when we hit the 38%, we quickly ran out of gas and backed off. Not a whole lot, but like I said, it looks like we finally established ourselves a little bit of a bottom here at this 984. We'll move into the 2-hour because this is the 30-minute chart. So as we made a run to this 1118, and right here we'd hit 38%, this range here. The market started going back off. The market is going to be going through, as I said before, is going through some basically balance or rebalancing. And the market's going to swing in different ways. And when they gather momentum in one area, they're just going to push it for all it's worth because they know there's a lot of people on the wrong side of the market. So, here, when we establish this bottom, they're going to start working hard. But I think, like I said, it was a good area to go and fade against that 38%. I also talked to some people about that. Good area to go on and I wouldn't necessarily say you had to short it, but if you played it from the long side, not a bad area to take off those longs. It's the same thing with the crude oil to a certain extent. The key thing is not that you're trying to catch tops and bottoms, but what that you want to play, you want to be quite nimble. And you want to, if you miss part of a move, then fine, you missed a part of a move. You need to go in and be, I don't want to say selfish, but you have to be determined to get your price, and if you don't get your price, then you have to be willing to walk away or let the market run away. You can't be chasing. This is an absolute wrong environment to try and chase a market if it gets overdone. If you're saying, well, I really wanted to buy it here, and it goes higher, and you're like, you know what, I don't care. I'm going to chase it. I'm going to jump after it. It's probably going to the moon now. And by that time, we run out of gas, and we run out of gas at a very key area, which in this case was the 38%. So you don't necessarily, we're not the type of market that you want to go in and necessarily be fading the market, but you want to go in and look at things very carefully, quite carefully, because these markets can keep on getting a little exaggerated. We'll go in and give a good example, and we're not covering crude quite yet, but I'm going to give you an example on a 5-minute chart with the crude, how we get these markets can get running away quickly. We're starting to slow down now a little bit in crude oil, but I had spoken to some people about this 47.45 being the 61%, and 47.63 is actually the 38% of the bigger range. Well, this market finally bottomed out, and you can see it took off like gangbusters. We actually got a buy signal on the 30-minute at around 46.70, okay? This thing took off like gangbusters, and we got up here, we punched it up higher in here, and this market was not going to go on and relent for this move. You see here, they really tore up a lot of people on this pullback. They started taking off, and anyone that tried to go and short into this initially really got their fingers burnt and probably were shaking in their boots as we continued to march higher, thinking, okay, we might even make the 47.95. This 47.72 was pretty solid in the sense that you can see some nice battle zones here, especially really right in here and here, and they ran out of gas just about 2 pips or 2 ticks away from here. That being said, the market remained exceptionally stubborn and hung on here and really had people really, quite concerned. We'll go and mark this off real quickly. Now, whether you trade crude or not is irrelevant. My point is that once these markets bottom out, or whether it's on the upside, it's just like gold, the turnaround can be furious. You see what I'm saying? It can be not only furious, but unrelenting, where it just keeps on going and going and going until they smoke people out. And, we had, initially when we had the run-up this morning in the European session, we quickly ran out of gas here, and we came back to challenge the 61% of a shorter range, and when we blew through it, we hit some stops, and the market wasn't relenting. And I had this 47.63, which is a 38% of a bigger range, for 45.82 to the highs that we had most recently at 50.54. Now, I'm not saying the outright highs, but most recently the 50.54. And the key thing that you want to go and look at, when we go and move this over here, a little simpler. The key thing that you want to go and look at is that this market wasn't letting go. I mean, technically, I guess you could look at it and say, this is really a tweezer bottom if you had a chance to catch it right here. And actually was talking to some people right when we were right here at this area. But, someone could have taken it here and said, okay, that's a great area. But if you think about it, look at here, this market wasn't even giving up its gains. It was just sitting here. And then we did finally get a pullback to about this 45, which made sense because you kind of come back down here, which were the highs. Made another run back. It's just now starting to pull back. It was only pulling back by pennies, even though the dollar was beginning to go on and strengthen. My point is that you have to be very chinchy, or whatever you want to call it, where you come into these levels. Whether you're trading the SPOOs, whether you're trading FX, you really have to come in with certain levels, and you want to look at a confluence of levels. Now, it's not good enough to just be the level. You want to even have a confluence of a fib so that you can try and put the probabilities on your side. Because if you short it in here and the market takes off, hey, you came in at a good price, good level, you did your homework, hey, that's just the way it goes. But if you just come in willy-nilly here, you're liable to go in and get your fingers burned pretty bad. And ultimately, maybe the next day you could be right back down here in the crude oil and thinking, wow, I lost all that money. Same thing almost happened to me, like I said, in the gold market. Obviously, if I'd have hung on to those positions, I'd be in great shape. But at the time, I was really in bad shape, shorting that gold at 1329, 1338, and 1348, or 1349, whatever it was. It was moving so fast at the time. And I was really, taking it pretty hard. I almost added some more at 1360. I thought, you know what, no use making the pain any worse. I hung on, the trade ended up paying, but what I'm saying is these markets can really run away with themselves. Now we look at gold, and it's bottomed out at 1308 this morning, and what a heck of a fall. Now, we talked about that yesterday with the gold miners and junior gold miners and the futures, and how we thought we'd make a run to 1307. And potentially we could eventually make it down to 1289. So let's go and move back into the charts with FX. So we'll come back and see what we're looking at here for the euro. Now, we just ran into, and we're going to point this out real quick, don't have time to copy it over here, but you can see we just ran into this area right here. 1109 is the 38% from down here, 912 to the high of 1428 on the Brexit high. That same evening when it looked like everything was hunky-dory and they thought that it was going to be remain. So we've run out of gas here, and this was my point here, is that it's going to, the way these markets are trading, you have to do just exactly that. Trade these markets in the sense that you don't want to fall in love to the downside, you don't want to fall in love to the upside, you just want to go and trade it, pick your technical levels, and hopefully, or preferably, a technical level that has confluence, like this at 38%, and you can see some nice battle here at the 1115, right here. So a very good area then. If you're long, certainly definitely a great area to go in and lay off your longs. But if you want to try and scalp it, not a bad area. If you want to try and scalp it for some change. But if you're going to try and go the other direction, you really have to be very careful where you pick your levels. You got to find a level and you got to find a fib for confluence to put the probabilities in your side. Obviously, if you sold around this 1110, 1108, 1105, then you're doing okay. You got about 25 pips in your back pocket. But like I said, you have to be careful with this. Now, as we move back in here into the 2-hour chart, looking ahead, 1118 is pretty key. So they would have to get, one of the things that I said when you're looking for a confluence, and we're talking about levels, this is why it's important to look at charts on multiple time frames. Here it looks like, you're looking here at 1137 is pretty key on the 30 minutes. But you want to be looking also at a 2-hour chart, or maybe some of y'all use a 4-hour chart. And obviously 1118 is pretty key here. You see here, this was the last area. Yes, they dipped a little bit below it on the fallback, but 1118 is where when they rallied, they came back to test 1118. So there's a lot of good battle in this area here and right here. So you had to feel pretty good, taking a little bit of a chance, but if you decide to go in and short the euro, thinking, okay, it's overdone, because these markets are going to swing to the upside, they're going to swing to the downside, and thinking that, hey, you know what, the euro's still in trouble, things are still looking bleak, you could go in and take a short against that area. But you want to go in and look, as I said, not only the levels that you're working at, but you want to look at a bigger picture level, in this case 1118, because what you have to think is that when you come in, you're probably not going to catch the turn. So you have to think, how much heat am I going to be willing to go in and take? And I need to come in an area that is well enough that they're going to have a difficult time getting past that area. They'll possibly get past that area. They'll more than likely get past that area, but it has to be a good enough area where you'll see some very good resistance, whether it's to the downside, whether it's to the upside. I mean, resistance, what I'm saying is where they want to buy them once they get to your level, or they want to be shorting them against that level. Doesn't mean we couldn't have popped right past this 1118, but you would think, I'm in pretty good shape. Because what you want to look at least that's the way that I trade, I'm thinking, well, if they get beyond, they got this 1151, and chances are, if they run out of gas there, they're going to have to come back to this 1118. They'll probably dip below it to find support, and I have a chance of going to get out, if I'm wrong. And if you manage your, and this is the way I do, I never come in. I like to manage my trade. So I'm just giving an example. Obviously, we had the 38%, so that was an excellent area to short it. But I'm just saying is if you'd shorted coming into this 1118, and I think we can look at the high on the euro, it might have been like 1112 or something. But if you shorted here and the market went against you, what I like to do is manage my trades. So as I know, I'm thinking I'm not going to likely catch the top of the bottom, but I'm looking as where to come in and scale in. And so I'd probably be looking here at this other area here, which would probably be like about 1133. I'll add some more. As we come back down here, I'll take off the one for the 1133. I know it's FIFO, but that's just the way I look at things. Take it off here, and then as it dips back to, let's say, the 1112, I can easily take off. And my focus is more towards scalping as opposed to day trading. I can take it off again, because what I'm thinking is if it goes past the 1118 and gets too far beyond that, I still believe in my overall trade because I'm looking at a 2-hour chart. I'm looking at maybe a big Fibonacci, which in this case was the 38% of this low of 912 to 1428. But I'm thinking, you know what? I was wrong. They're still working higher. They're not willing to respect this 38%. at that time, provided it played out that way. Obviously it didn't because we're under pressure right now. But I'm saying the way I look at it is, you know what? It got past it. It should never have made it to 11. I'm just using an example. Should have never made it to 1138. I am short from, let's say, I'm just using an example, 1133, and also short the original at, let's say, 1115. So I say, you know what? It never should have got to that level. So obviously I'm wrong, but I think we're really well overdone. We come back down here, we make the run down to 1115. I'm happy to take the 1135 or whatever off. Let them rally back up to 1127. If I think that I still believe in that trade, I'm going to sell it back again at 1127. As we come back down here to test support here, let's say at 1108, then I can cover them both. And that's the way that I trade, but mine is more of a short-term horizon. But my point is you have to, in this type of environment, you know, it's one thing when you're trading like this, but in this type of a wild, swinging environment where news can certainly go on and impact the market, you have to be very chingy on where you come in at these levels, because you have to be humble enough. And it's not even being humble. You have to just realize that no matter where you come in and how good it is, you probably still, the market's still probably going to work against you. If you come in with that mindset, you're going to do a whole heck of a lot better. Because if you come in thinking, I'm selling right here and the market's probably running out of gas, you could probably set yourself up a little bit for failure in these fast markets. If you come in and saying, you know, I'm going to come in at a price, and I'm probably going to end up, the market's probably going to go even past where I think. But I'm going to come in at a price where I think at least it should go and slow down and potentially run out of gas in that area. Then you're going to be more judicious with your entries. Wow, well, you know what I mean? I can't just come in willy-nilly. I have to pick a pretty good area. Okay, well, I think they could run out of gas at 1118. Let me try 1115 if I really think, you know, here. Now, like I said, we saw the 38%, and we got just above 11, which will stop a few people out, which we did. And you had the confluence of the 38%. The 38% of a very huge range. So, of course, that ended up ultimately stopping the market dead in its tracks for the most part. And we've seen a very nice little pullback. But it was a great area for longs who played this. Maybe they had gotten long off of how they saw the market set itself up on the 30-minute. You see here, we've been in the sell mode here. So the momentum's going lower. We finally get into this area of consolidation here. See, we don't know whether the market is going to break higher or break lower. Have a nice area of consolidation after being in a sell mode for quite some time here. We finally break higher, and not only do we break higher, hang on, the market continues to add. You see what I'm saying? He closes solid, he closes. So that means, hey, I got to go with this momentum. But, like I said, on this run up here into the 38%, excellent area to get short. You had this 1115 here, which is different from what I have on the 2-hour, which is 1118. But that's what I'm saying. You look at these levels, you look at this huge fib, which is at 38% of this entire range, and you say, you know what? I got a lot of things working in my favor at this point. And, like I said, excellent area for longs to take off, because if you're still bullish the euro, that's fine. My guess is, my thoughts would be get long again at 1048. Take your longs off and get long again at 1048 until the momentum changes. But once again, you have to be exceptionally nimble because news is moving these markets. So let's go on and take a look at some other markets here. We got a late start today because obviously we ran into some GoToWebinar issues. I had clicked on the start button and it started, but it just kept saying it's going to start, it's going to start. We had video, but we had no audio. It just simply the GoToWebinar would not engage. I don't know what was going on. So let's go on and take a look here at the dollar CAD. Now, my thoughts here was this is the key area. We talked about this yesterday, this 31.31. And we ran out of gas right before we got there, but we had a pretty good run towards this 31.31 on the crude oil, dropping all the way down to 45.82-ish around there. But we've seen the crude oil rally back, and in turn, the dollar CAD, come right back down. Now we're starting to see, even though crude oil is holding up overall okay, we're seeing the dollar CAD start to reassert itself. That has more to do with the dollar, as you can see right here, and the euro. You see that right here? And a very nice little, at this point, from here it looks like more like a shooting star. If you take it from a little bit closer, it's more closer to almost like a gravestone doji. It looks a little bit long, but not that long. But the play that you're seeing more here in the dollar CAD is more of a play going back into the dollar as opposed to the actual crude oil. That being said, like I said, here's the deal, is you're going to get a lot of conflicting, trying to think of the right word, but like when you're in the water and you're getting you're getting different, not waves, but you're getting different pockets of water coming in different directions. So once again, like I said, the only thing that you can't be in tune with all the news. The only thing that you can do to manage your risk, and that's where your technical analysis comes in, is these levels. That's where you have to go and manage your risk. Bob said it right. He said it. Bob says it's occurrence, and that's it. You're going to get, right now, you're getting a lot of cross currents because you're going to be saying, wait a minute, this is stupid. This doesn't make any difference. This doesn't make any sense. Cruise close to its highs. How can the dollar CAD be going higher? Because right now, you're getting a lot of cross currents, as Bob aptly pointed out to me. You're getting a lot of cross currents. So right now, after we had this play into the euro that made up to 38%, that's why you need to be looking at different pairs at the same time, even if you don't trade them. Because right here, when you got this running here at the 38%, you know that they're going to go and start to move into the dollar. So you're seeing that. You see right here, you got the euro here running out of gas here, and then correspondingly, you start to see, not happened well before, but I'm saying you're starting to see a move now into the dollar CAD. You see what I'm saying? Is it's rallying as the euro is running out of gas. You see what I'm saying? We ran into the 38%, and you can see it's continuing to weaken. But as I was saying is, you've got the momentum going for you here on the 30-minute. And I'm trying to, may sound like a broken record or beating a dead horse, but that's what I'm saying. You're looking for anything to get the momentum going in your direction. Even though, like I said, you have to be very nimble. But like I said, you got the momentum going in your direction. It's still on the buy zone. Point is, use these fibs and levels to exit out so you can be nimble. Fine, get long again. Get long at 1048. Matter of fact, let's go and do a quick fib on this to see where potentially where's a good area. I like the 1048. So 1058 is 38%. You know what? I like that 1048. Actually, we've got, you see this low right here? Get rid of this here. That low right there. So let's, is 1047. So there's that 1048. So maybe you come in around 1045-ish. And you can put the long back on. If you're saying, hey, you know what, the momentum's still going with the euro, I'm going to go and buy a couple. Now, like I said, it's quick markets, so what you could do is if you want to be a little bit chinchy, come in right here around the 1040-ish, 1042-ish, put your longs back on. But I'm saying you have to be smart. That's what I'm saying is don't fall in love with your position to the upside, to the downside. Don't listen to the people that tell you it's the end of the world, because right now, we've got the SPOOs at 2005. They did get up as high as, what, 2008, 2007. But like I said, if you listen to the people, that one guy that was telling me, he says we're going to 1940, 1920. As I said, don't fall in love with those positions. You're just here to trade this stuff. Especially in these kind of fast markets, it's all about just trading these positions. Not about buying it and then just holding on to it, whether it's to the upside or to the downside. So let's go and move in here into the cable. We'll go back here to the dollar CAD quickly. So for the dollar CAD, where is our big level? Well, depending on what happens to the euro, and you have to keep a very close eye on the euro right here. I would be paying attention to the dollar CAD when the euro comes down, provided it does, to this 1048 area. That may equate, unless the crude oil really falls on its, on its sword. That'll probably equate to the dollar CAD coming up to this 3083. My guess is if you get down there and you're long dollar CAD, take some of it off. I'm not saying you have to take all of it off, but if it was me, I'd be taking all of it off because you got this 3083, which is 40 higher, okay, about 48 higher, and look at the euro. 40 higher, 40 lower would drop us at around 35, and that comes into our area, which remember I said, if you want to squeeze a little bit more, to come in around 1042-ish. So they're not going to move pip for pip, but that'll probably equate to the dollar CAD, all things being equal, coming up in here. So you have to play these things smart and look at the relationships between these markets. But that's the way I would look at it. As far as buying the dollar CAD, I think any moves back down here to 29.76 are going to be supported. And once again, look for them to potentially take out the most recent low to hit some stops. So we'll look at the most recent low, which is 29.66. So I would say probably like 29.55 if you can get it down there. If, like I said, provided it pulls back. This 29.76 is going to be supported in a general area. They want to go and take out this low to hit some stops, which is 67. Well, actually 66. Let them pull them down to about 53, 55, then you could get long there. All things being equal, like I said, obviously you see a big old bunch of news coming out. It could certainly go and impact that. You have to be aware of that. You have to be aware or cognizant of what's happening at that time. But all things being equal, that's why I think that you'll see the support, on the dollar CAD. So let's go and move into the cable and find out what's going on. There's no use looking back down here. This makes no sense back here. Those days are long gone for now. So we'll take a look at where we stand here with the cable. And we see here that the 34.48 is going to be the 38%. Before all said and done, I think we will make it up back here. And the key area is going to be this 35. So let's take a look and see where we are here. And we have a nice little gap between here and here. So let's just go in and pencil that in. So before all said and done, my guess is we'll probably, somewhere when everything starts to calm down, we're going to make it into this zone. It won't get there anytime, we won't get there immediately, but we're probably going to go into this zone. So we'll take a look at what those levels are. That's, let's take a look. 34.84. This will also help you, even if you're not trading cable, which I don't, will help you when you're looking at the euro or any of the other dollar pairs to see what's happening. And the upside is going to be 35.59. Actually, 35.60, okay. My thought is that eventually we're going to make it up in here. Eventually things settle down. We'll ultimately get past this 38%. They'll have some trouble there. We may back down. But the area where you're going to consider shorting the cable is right in here. My guess is probably eventually before it's all said and done, we'll probably make it right here to 35.50. the 50%. And if you look at it, that would fill the gap here. Actually, the gap fill here, yeah, right at 35.50, 45 actually. So I think this where when things settle down, we're going to rally back up in here, and then this is where you want to get short. And then that short will probably take us all the way back to this area, which is 32.23. So we'll mark this off. So you want to look ahead and kind of look at things on a broader scope. That way you don't get, hijacked. Obviously just above the market here. But my guess is we may come back in here, and then eventually we'll make it up in here. We'll run out of gas, and then we'll probably come down here to test this 32.23, 25 before all said and done. But it's a good, we'll get a bop back and forth around here, but eventually we'll work higher. But it's a good idea to keep an idea, keep an eye on what's happening here in the cable. Even when we make it back up here, people will be saying, things are still going to look pretty tough going forward. So you know what? They're probably going to have to work lower. And then that's eventually what they'll do. When we get in here into this area, which we will in all likelihood, then we'll probably make another run. It will be slow, and then this is where we would look to cover, 32.23. Ultimately, the market may even want to come down here and take out the lows here. But, once you get up here, short in here, you got a chance to catch yourself 300 pips. So yesterday we looked at the euro pound, and I'm getting ready, almost time for break. Well, I'll be doggone, it didn't save it. Well, if you remember, 84.16 was that area that we had. And I think it was 83.75 was like I don't know if it was a 61% or something like that. So we backed off pretty good from that. But I remember we talked about 84.16 being a very key level. And I think it was 83.70 or something was a key fib. I mean, we could look at it. Oh, okay, here we are. Okay, it did stay. So look, pretty doggone good thing right here. Look at that. 83.68. We pointed this out. That was a 50% of that big range. 84.16 was a level. So we pulled off pretty good. You had a chance to sell it at 68. We talked about it before it even got there. So basically, you almost top ticked it, and you'd be up about 70 pips. Luca says, can you take a look at the euro yen? Yeah, we can do that. We're getting ready to go on break, but we'll do that. Hang on. I don't trade the euro pound, but we talked about this. I said this yesterday. I said, you know what? This has the best risk to reward of everything. And right now you'd be up 70 pips, but I thought it did because you had the confluence of these two, and then 84.16 was huge, and we had 84.13 is 78%. This is what I'm talking about, is that we have, you try and put all the probabilities on your side, because we could have kept on going higher, but you know that you'd be coming in at a good price. So even if we go higher, in all likelihood, they'd have to come back to test it as the market got overdone. You're able to get out and still make money, potentially, even though you were initially wrong. If you choose your levels or your entries wisely by trying to get a confluence of key levels and fibs. So let's go and take a look at the euro yen. It's actually time for break, so we'll take a break. We'll pop that up here. Let's take a look at this thing's doing. Let's see, right in here. Right there, which is where they already went. That's pretty solid there. And let's take a look at it on the fib. Well, we've exceeded the 61%, so this 106.01 is probably where it's going to ultimately go to. So let's go and mark this off. And we'll do some more work when we get back from the break. So let's see, we have this line just below it, which is 781. Let's take a look here. $550, which comes in right there, which is actually 568. And there, 790. Well, we're still a long way. Boy, wow, that's one heck of a range, let me tell you. On the pullback, 1546. Let's take a look at what we got here. It's 1416. 1396. They're going to have some trouble getting past this right there, which is 1409. Right there. I think they're going to have some trouble getting past this area, so then we'll do some more work, and then we'll take a break. Now let's take a look at this on a daily chart. Move this to a 2-hour. Do a quick fib. Yeah, you see 1409 and 1427 is 38%. So we'll go and mark these two off. Got a nice confluence there. So you got 1409, very solid resistance. I mean, I think at a level that's going to be well respected. And then you got 1427, which is at 38% of the most recent range. Right there. This is where I think the market is going to go to, and it's going to have some trouble getting past this area right in here. 1409, and we'll pull this back here. Well, we have to go to a weekly chart, but you can see 1409 is pretty solid. This high here is 1429. 1427 is at 38%. You can see here that they basically almost filled the gap there. But it will have a tough, that's 1550, it will have a tough time getting, you're coming in a very good area here. You can see here there's a lot of action taking place, and just above the market, I'd go with this right here, which is 1475. So you can see here you've got actually a very nice zone here between 1409 to 1475, and you've got 1427 at 38%. It's going to have a tough time getting past this area. This is an excellent zone here to come in and short the euro yen. Excellent. It's already time for a break. As I said, we got a late start today. Couldn't get the GoToWebinar started, but we couldn't get the audio to engage. So it's time to go and take a break. We'll cover the reports at the bottom of the hour. I'll go and put it on the news in case anyone wants to see that, and then we'll take a break. I only take one break throughout the 2 hours, so that break's about 10, almost 12 minutes. It gives everybody a chance to go and get water, tea, coffee, whatever, and do what you have to go in and do. So, like I said, I only get one break for 2 hours, so it lasts about just a little over 10 minutes. So I'll catch y'all back in just a little bit. And thanks for joining us here on the crossover. Yeah, I mean, actually, Morning Edge.